Hello students, welcome back. This is Ms. Mercado once again. In this short lecture, we're going to begin covering a brand new chapter. This is chapter 4, which deals with income tax withholding. This is accounting 1329, payroll and business tax accounting. I am Ms. Mercado, and we are utilizing the payroll accounting 2020 30th edition textbook that you see an image here. Okay, now this short video is going to help you complete your homework 4A problems. Okay, you're going to have several problems. I'm going to go over 3 of the problems. Try to highlight key areas of the chapter, that way you become familiar with them and you know how to compute the different calculations. Okay, I am not covering all of the problems. Make sure that there are some of the problems that have a short video included in Cengage, that you review that information or that content. Also, the textbook has great examples of many of the problems. That way you can follow along different steps. The key here is to read and identify the section that applies to the specific problem. Okay? So, without further ado, let's get started on some of these problems that we're going to be having in our chapter 4, our homework 4A problems. Okay? So the first one that we're going to start off with is with problem 4.1a. Okay? So this problem reads, Sean Matthews is a waiter at the Deluxe Lounge. In his first weekly pay in March, he earned $300 for the 40 hours he worked. In addition, he reports his tips for February to his employer of $500, and the employer withholds the appropriate taxes for the tips from this first pay in March. Okay? So we are being asked to calculate his net take-home pay, assuming the employer withheld federal income tax using the wage bracket method, and this person is married and has 2 allowances, Social Security taxes, and state income tax of 2%. Okay? So we have to do all of these calculations to come up with the employee's net pay. How much are we going to cut the check to the employee for? Okay? So in this particular problem, we are introduced to the wage bracket method. When we use the wage bracket method, it is very easy. Okay, there's different tables either in your Cengage problems or in the end of your textbook. Usually all of the problems have a link if you are required to use tax tables. That way you just click the link and it will open up the appropriate tax tables for you. But this is an illustration of what one of the wage bracket tables will look like. Okay, now this table is particularly for married persons. There's different tables for different people. If they're married, there's one set of tables. If they're single, it's another set of tables. Also based on the frequency of pay. There's tables for if they get paid weekly, bi-weekly, semi-monthly, quarterly, blah, blah, blah. Okay? So you need to identify the appropriate table when you're looking at your tables. The most common mistake I find is that students are looking at the incorrect table. Okay, so just make sure that there's a lot of tables that are provided to you, that when you are referencing the tax table, that you look at the correct one. In this case, the problem says that this individual is married. So I'm looking at the married table, and it says that this employee gets paid weekly. Okay, so I'm looking at the weekly pay period. Now, we are deducting taxes for the weekly pay of $300, but this particular week, we're also going to include the $500 of tips that this employee earned last month, so we can go ahead and we can deduct the payroll taxes associated with that. Okay, so let's start off by working our calculations. First, we're going to start off with our gross pay. This is how much the employee earned. Okay, and this is how much the employee earned from working, his regular wages for the week. His regular wages for the week are $300. Okay, that is how much he earned this week. Okay, now from that, I need to deduct federal income taxes. Okay, but when I deduct my federal income taxes, I am going to deduct taxes on the $300 of wages plus the $500 of tips. Okay, so when I look at my federal income tax table, I'm not going to look at the figure of $300. I am going to look at the figure of $800. Okay, because that is the amount that we are going to be withholding taxes on. Okay, It says here that we are going to withhold the appropriate taxes for the tips from this paycheck, okay? So what I'm going to do is I'm going to look at my tax table. I've already identified, I've screenshot the table that we're going to be using. This is a married individual. I have my married table here, and he gets paid weekly. So this is my weekly payroll table. Okay. So I'm going to look for $800 in here, in these first two rows. So you're going to locate the amount that is taxable. The amount that is taxable is $800, $300 from wages, $500 for tips. Okay. So I'm going to look at my 800, and I located it here. Okay. Right here, okay? So there it says, if I earn between $799 and $810, these are the taxes that are going to be withheld. Now I need to look at how many allowances I'm claiming. Well, I'm claiming 2 allowances, okay? So I need to look over here on the top. On the top, it gives you the amount of allowances. So you're going to identify where the 2 allowance comes in, okay? So my allowance is going to be 2 right here, okay? So now I'm going to look at where it crosses, okay? So I've got 2 allowances, and between $799 and $810, because I'm looking for the $800 figure. It's between that range. So my 2 is going to fall on $42. So that is the federal income tax amount that I am going to withhold. $42 right there. Okay. So this is the amount I'm withholding. $42. So you find it by identifying the number of allowances. It's 2. It was provided here. Okay. And then locating the wage amount. And I'm looking for $800. This is in between that. So this is where I get my $42 from. Okay. So this is a deduction. Okay. Now it's very important because it's a deduction. I need to either enter it in minus sign or in parentheses. Okay. That way it shows as a deduction, because it is a deduction. If you don't enter it in a minus or a parentheses format, it's going to get counted incorrect, even though the dollar amount is right. Okay, so we've done our federal income tax calculation. Now we're going to do our Social Security. Okay, Social Security, and first I am going to do OASDI. Okay, so for my OASDI, I know that I have to pay taxes on how much? Well, it's the $500 of tips and the $300 of wages. So that's going to be $800. My OASDI rate is 6.2%. Okay, so let me get my calculator. So that's going to be $800 times 6.2%. That's going to give me $49.60. So I'm going to deduct from my employee $49.60. Okay. Also, I have Social Security, HI. Okay. The $800 is taxable, and I'm going to multiply it times my rate of 1.45%. Okay. So I'm going to get my calculator out. It's $800 times 1.45%, and that'll give me $11.60. Okay. Remember, these are deductions. This is going to be taken out or deducted from your paycheck. That's why they're in minus. Okay, deducted. Okay, and the last thing we have is state income tax. The state income tax rate provided is 2%. Okay, so state income tax. Okay, for that I have my $800 times my rate of 2%. So I've got $800 times 2%. That's going to be $16. Okay. Now I have all of these deductions. Okay, this is what's going to be taken away from the employee from Sean Matthews' paycheck. This week he made $300. Last month he made 500 in tips. The employer is going to withhold all of the necessary taxes from the tips and from this week's paycheck, from this particular paycheck that he's getting, which is $300. Okay, but the taxes are going to be for the combination of both, which is the taxes, which is the wages of $300 plus the tips of $500. So we're paying taxes on $800. That is where students sometimes get confused. Yes, he did earn only $300, but we're going to pay taxes on the $800 because it says here that we're going to withhold the taxes for the tips on this paycheck. Okay, so now I can calculate his net pay. Okay, net pay is what you actually take home. This is what you get to take home and spend. Okay, gross pay is what you earn. Net pay is what you take home. Okay, so what we're going to do is we're going to deduct. We're going to do our calculation. So the employee made $300. I'm going to deduct the federal income tax of $42. I'm going to deduct the OASDI of $49.60. I'm going to deduct the HI of $11.60. And I'm going to deduct the state income tax of $16. So this employee on this particular week is going to take home $180.80. This is how much the employee is going to take home. Okay. Now the key here is there's two takeaways. First is learning how to calculate your federal income tax using the wage bracket method. When we use the wage bracket method, make sure that you're using the right tables. Okay, make sure that if they're married, you use the married. If they're single, they use the single. And what kind of payroll are they doing? Are they weekly, bi-weekly, whatever the case might be? Okay. You identify the number of allowances. You run it down until it crosses the amount of wages earned. In this case, we're looking at $800 of wages, $500 from tips, $300 from actual weekly wages. So that falls between, and it moved on me. It's 42 right there. It's $42 right there. Okay, so make sure that you identify the $800 mark. It's between $7.99 and $8.10. To allowances, that gives you the $42 right there. Okay. Let me put a little arrow. This is coming from right there. Okay. So that's the first takeaway. The second takeaway is all of the items that you're deducting need to have a parenthesis or a minus sign, as long as it shows a deduction. In Cengage, you'll have specific instructions as to what the system wants you to do, how to enter it. But make sure that you do enter deductions, because if you don't, it's going to count it incorrect. Okay? And then you can calculate your net pay by getting your gross pay minus your different deductions, and that'll give you your net pay, which is your take-home pay. Okay? So this is the wage bracket method. This is when they say wage bracket, very simple. You just look at a table and you identify what criteria, based on the criteria is provided, what is it that I'm going to be withholding in federal income taxes. Okay. Now, there's another method of calculating taxes, okay, which is the percentage method. Now, this one requires more calculations, and it can get a little bit confusing. Okay. So this problem that we're doing, this is problem 4.2a. Okay. This problem is asking us to use the percentage method to compute the federal income taxes. Okay. So there's a list of employees provided. I am not going to calculate all of them. I'm going to calculate some of them. The concept is the same. The steps are the same. Okay. There's also different tables associated with the percentage method. If you see the tables here, it says percentage method tables. So make sure that you are using the appropriate tables. You're going to need two tables for when you calculate the percentage method. The first one is the table for allowances, and the second one is a table for the actual tax withholding. Okay. Now, they provided us a list of 5 employees, their name, their marital status. Are they married, which is an M, and if they're single, that's an S. They've given you the number of withholding allowances. These are their dependents, okay? And they've given you their wages or their salaries and how frequently they're getting paid. Very important. There is a table for each type of salary type, okay? Like this table number 1 is for weekly pay, okay? On the left-hand side, you're going to have it's for single persons. On the right-hand side, it's for married, okay? So make sure that when you are calculating taxes, you look at those things. Okay, are they single? Are they married? So I can look at the right side. Which side am I going to use, the left or the right? Okay, how frequently are they getting paid? Is it weekly, bi-weekly, semi-monthly, monthly? Okay, we have quarterly down here. Okay, semi-annually or annually. Okay, so we have different tables depending on the frequency of pay. Okay, so these are the 2 tables that are going to be used. Okay, now let's start with the calculations for using the percentage method for Amoroso. Okay, the first employee. There's a series of 4 steps that I like to do just to simplify things for me when I'm calculating my percentage method. Okay, step number 1. I need to determine the amount of gross wages earned. How much did this employee make? Well, my gross wages are provided here. Amoroso makes $16.10. That's how much he makes. Okay. Now, I need to figure out, based on the number of allowances, what is going to be the allowance given to this employee for having 4 allowances or for claiming 4 allowances. Okay. So, I know that this employee gets paid weekly. Okay. So, I'm going to look here and I'm going to find my weekly amount, which is right there. Okay. So, because this employee gets paid weekly, they're going to get $80.80 credit or allowance for every allowance claimed or for every dependent claimed. Okay. So, here I'm going to do the calculation. My weekly amount for the allowance using the table provided is 80.80. Okay, this is weekly. So I'm going to get 80.80. And I'm going to multiply times the number of allowances, which is 4 allowances. Okay, so let's see what number that gives us. Okay, so it's my rate is 80.80 based on the table provided, and I've got 4 allowances. That's gonna give me $323.20. Okay, so what does that represent? $323.20. That represents the amount of wages that I am not going to pay taxes. I am getting an allowance. You know what they're saying? Whatever money you make, we're going to give you an allowance based on the number of dependents or allowances that you're claiming. Okay, so this amount, we're not going to charge you any taxes on it. Okay, now step number 3, we're going to subtract the amount for the number of allowances claimed from the employee's gross pay to find the excess of wages over allowances claimed. Now here, we're going to calculate the excess wages. This is the actual amount of wages that we're going to be responsible to pay taxes for. So it's step 1 minus step 2. So on step 1, I got 1610. Step 2, I got 323.20. Okay, so I subtract those two. 1610 minus 323.20. Okay, so I'm going to pay taxes on 1286.80. Okay, this is the amount that is subject to tax. Okay, now I need to figure out how much tax, okay, am I going to pay. So step number 4, which is the last and final step, we have to determine the withholding tax using the percentage method using the applicable tax tables. Okay, when we locate the information in our respective tables, we're going to work from right to left. Right to left. You're always going to start in the right and you're going to move yourself up to the left hand side. Okay, so this first employee says he gets paid weekly. Okay, so I am going to use my weekly table, which is table number 1. Now this employee is married. Okay, it says here that I'm married. Okay, this is for single. this is for married. So I'm gonna look at the right hand side when I'm calculating my taxes, okay? I'm gonna be looking at these numbers right here for married, okay? Now this person has 4 withholding allowances. That was stated. That's where we calculated our allowance here. Now, what we have to do is we're gonna start off by identifying where does this number fall into the table, okay? We're gonna look at the table and we're gonna look for that number, 1286.80, okay? So I'm gonna look, where does it fall? Well, it falls under my second category, okay? From 600 to 1745. That's where it falls under, okay? Now that I've identified where it falls, I'm gonna start my calculations from the right to the left, okay? So this is what I'm gonna do. Your starting point is gonna be step 3, okay? What did you get in step 3? Well, I've got 1286.80, okay? And then you're gonna subtract whatever number is given here, the excess amount. This is $600 here. So I'm gonna subtract the $600, and that is going to give me, let's see what that gives you. 1286.80 minus the $600. That gives me $686.80. Now, I'm going to multiply times my 12%. Okay? We're moving from right to left. So I'm going to multiply it by my 12%. Okay? Now let's see what we get. We get 82.416. Okay? I'm going to look at my third digit and I'm going to round up because this is greater than a 5. So it'll be 82.42. Okay. My last thing is you're going to add whatever amount is provided right there in front of the percentage. Okay, this is the last step. The amount is 37.30. So I'm going to add the 37.30. And that is going to give you 82.42 plus 37.30. That will give you $119.72. That is the amount of federal income tax that is going to be withheld from this employee's paycheck. Okay, $119.72. Okay, so step number 1, how much did this employee make? What they made was $16.10. Step 2, calculate the allowance that they're going to receive based on the number of allowances. Well, this employee gets paid weekly, which is right here. So the allowance will be $80.80 per withholding. So I've got $80.80. I've got 4 allowances. That gives me $320.20. Okay. Step 3, you subtract step 1 from step 2 to calculate the actual amount that is taxable. Okay. So $16.10 minus $323.20 will give you $1286.80. Okay, this is the taxable. This is the wages on top of. This is the actual amount that you're subject to be taxed on, which is your gross wages minus any allowances that you earn. Okay. So once you figure this out, you're gonna look for this number on the appropriate table. Okay, and now let me put here the word appropriate. There's different tables. You need to look at the appropriate table, okay? In this case, my table is for weekly pay. This person is married. I'm going to locate that dollar amount in my table, okay? And then this is where the calculations start, okay? Your starting point will always be step number 3, which is $1286.80. You're going to subtract that last number right there, which is 600. That's going to give you $686.80. You then multiply it by the rate provided, which is 12%. That gives you $82.42. And then last step is you add that first number that is provided there in your table. That gives you $37.30. And if you run the math, the calculation, the amount that for federal income tax that will be withheld is $119.72. We're going to do the same calculations for a couple more employees. Okay, I'm going to copy and paste this information below. That way we can just repeat. Now this is going to be for Finley. Finley. Okay. So let me delete this information because this does not apply to Finley. Okay. So let's do the calculations once again. Okay. So for Finley, let's look at Finley. Finley gets paid bi-weekly. Okay? He has 0 allowances and he is single. Okay? So he gets paid $8.25 bi-weekly, no allowances. Okay? So let's determine the amount of the gross wages. Well, the wages are $825. Okay? We have to multiply the number of allowances claimed by the amount of one allowance. So this employee gets paid bi-weekly. Okay? So we're going to look at my bi-weekly right here. And my bi-weekly rate is $161.50. Okay? So I've got $161.50. But this employee has 0 allowances, so I'm going to multiply it by 0. So as we know, any number multiplied by 0 gives you a 0. Okay? This employee does not have any allowances, so they're not going to get any credit, any tax credit. Okay? Step number 3, we're going to deduct step 1 from step 2. Okay? So it'll be 1610 minus 0. That will give you 1610. Okay? I'm sorry, what am I doing here? I'm calculating amoroso again. I'm sorry. You see, that's what I get confused. Okay, we are doing, let me reverse. That is correct. I was entering in the wrong columns. Okay, so now I've got Finley down here. Okay, Finley. I was like, what is going on? It's the same dollar amount. Okay, so let's start over with Finley. Okay, that way we don't get confused. Okay. Okay, so Finley. Okay. Let me hide these so I don't get confused again. I'm gonna hide. And here I have Finley. Okay. That makes more sense. Okay. So Finley makes $8.25. Okay. Now Finley has 0 allowances. Okay. Finley gets paid bi-weekly. The amount, according to the table, for the allowances is $161.50. Okay, so $161.50 times 0 allowances will give you 0. Okay, so this person is not getting any credit because they don't have any allowances. They're not claiming any allowances. Okay, so we're gonna deduct step 1 from step 2. So $8.25 minus 0 will give you $8.25. Okay. Now we're going to do our actual tax calculation, okay? Now we're going to look at our tax table. He gets paid bi-weekly, okay? So now we need to look at the table number 2. This is for bi-weekly pay, okay? Now this person is single, okay? So now I have to use my single table right here, okay? Make sure that you use the right table. So now we're looking at the single side. How much did this employee make? That is taxable, $8.25, because remember they didn't have any allowances. So I'm going to look at my table and I'm going to find where the $8.25 falls in. And that's going to be the second tier, which is right here. Okay. So the $8.25 falls between $5.19 and $16.64. Okay. So now I can start working on my calculations. You always start off with the figure that you calculated on step 3, which is $8.25. Okay? You're going to subtract the amount on the right hand side first, which is $5.19. Okay? Let's see what that gives us. That will be $8.25 minus $5.19. That will give me $306. The next step is to multiply it against the rate provided, which is 12%. So we're going to multiply times 12%. That's going to give me 3672. And last but not least, I'm going to add the amount provided at the beginning of the income tax withholding table right here, which is 3730. Okay. So I'm going to get my 3672 plus, it will be 3672 plus 3730. That will give me $74.02. That is the amount of federal income tax that is going to be deducted from this employee. Okay? Now remember, in this case, we did not have an allowance because the employee did not have any allowances. Okay? Okay? So I'm going to copy and paste once again. And I'm going to hide this. I don't want to confuse you again like I did right now. I'm going to hide. Okay? So now I'm going to do Gluck. Okay. Let me delete the information here. So now we're doing the third employee. Gluck. Okay. So Gluck is single, has 5 allowances, and gets paid quarterly. $9,630. Okay. So this is an awesome problem because we are using a variety of tables. Okay. So how much is the wages earned by Gluck? Well, Gluck earned $9,630. Gluck has 5 allowances. Okay. So let's look at the table for quarterly. Okay. So quarterly, the table for the allowance values is 1,050. Okay. Quarterly will be 1,050. That is what we're looking at, quarterly. Okay. So we're gonna get the amount, which is 1,050, provided in the table, right here, 1,050, and we're gonna multiply it times the number of allowances, and we have 5 allowances. Okay. So I'm gonna get my calculator. So I've got 1,050 times 5 allowance. So the credit that this employee is going to get is 5,250. So that amount represents the allowance. You're not going to pay any taxes, any federal income taxes on that. Okay. Now that we have that, we do step number 3, which is subtract step 1 from step 2. Okay. So it'll be 9630 minus 5250. Okay. So that will give me what? 9630 minus 5250. That will give me 4,380. That represents the amount that is taxable for federal income tax purposes. Okay. Now we're going to look at the appropriate table. This employee gets paid quarterly. Okay. So let's look at the quarterly table right here, which is table 5. Quarterly. Okay. So this employee Gluck is single. So we're going to be looking at the single table, which is the left-hand side table. Okay. Okay. So we can start our calculations for Gluck. Our starting point will always be the amount that we calculated on step number 3, which is 4380. Now, I need to identify or locate that amount in my table. Okay. So that falls under 4380 falls under the first bracket right here. Oh, sorry, I'm using the wrong table. You see how easy? It's right here. Insert shapes. Okay, so we're looking at the quarterly because this employee gets paid quarterly, and we're looking for 4380. So it's going to be the second right here, 4380. See, I was looking at the wrong table. Something as easy as that will cause the whole problem to be wrong. So make sure that we're looking at the right table. This is quarterly, and this employee made 4380. That is taxable. That falls on the second tier, which is between $3,375 and $10,819. Okay. So now we're going to start off with the $4,380, and I'm going to subtract the amount provided on the right-hand side, which is $3,375. That is going to give you 4,380 minus 3,375, 1,005. We are then going to multiply times the rate provided, which is 12%. Okay. Multiply by 12%. That gives me 120 with 60 cents. And last but not least, we add that dollar amount provided, which is $242.50. Okay. And then we can do our final calculation. It will be 120.60 plus 242.50. That will give you 363.10. That is the amount of federal income tax that is going to be withheld from Gluck's paycheck. Okay? He's only getting deducted this amount. Why? Because he has 5 allowances. So because he has 5 allowances, he does not have to pay federal income taxes on $5,250 of the wages. Okay? So out of everything that he earned, only $4,380 is taxable for federal income tax purposes, resulting in a tax of $363.10. Okay. Last but not least, I wanted to show you how to do Quinn. Okay, this is the last one I'm going to be doing. Okay, because this is a little bit different. Okay, so I'm going to copy and paste, and I'm going to hide these. Okay. So, let's delete the information we have here. Okay. Now, Quinn is a little bit different because Quinn says that Quinn is married, has 8 allowances, and gets paid semi-monthly. Okay? $925. So let's see what's going to happen here. Okay? Quinn makes $925. Okay? Now we're going to figure out the allowance. Quinn gets paid semi-monthly. So let's look at this table right here. And my semi-monthly amount right here is going to be $175. Okay? 175. Okay? So I'm going to get my 175 and I'm going to multiply it by the number of allowances, and Quinn has 8 allowances. Okay? So 175 times 8 gives me $1,400. This is the allowance that this person, Quinn, is going to get because they have a lot of, or they're claiming a lot of allowances. Okay? Now, here I'm going to do a little note. Okay? Here I'm going to make a note. Okay? Since the credit obtained based on the allowances is greater than the wages earned, this person will not be withheld any income tax from their paycheck. So, the employee earned $925. They've got a credit of $1,400 based on the number of allowances that they're claiming. So, that means $1,400 is not taxable. Well, this employee earned $925. So, how much taxes is going to be withheld from this table? 0. No federal income taxes will be withheld. Okay? So, when some people wonder, well, how come I'm not getting deducted from my paycheck federal income taxes? Well, some people claim a lot of allowances. Okay? that causes you to get a credit when they calculate your federal income tax, and reduce the excess wages, which is the amount that is subject to tax. And in this case, that is causing for Quinn. That is causing for Quinn not to have to pay any taxes. So the federal income tax to be withheld from Quinn is 0. Why? Because the allowance is greater than the wages. Okay? That is why. Okay? Because the allowance is greater than the wages, then there's no tax due. Okay? So this is an important note right here. Okay? So that is the reason that Quinn is not going to be subject to any federal income tax. Okay? When working this problem, just make sure that you are looking at the correct values for the table of allowances. Okay? Also, looking at the right tables. Okay? How frequently are they getting paid? And are they single or are they married? Okay? That is very important. Okay? And then just follow the 4-step approach and you should do well. Okay? I'm gonna unhide. This is the solutions. For Amoroso, they would get deducted $119.72 of taxes right here. For Finley will get deducted $74.02. Black is going to get deducted $363.10. And Quinn is going to get deducted 0 for federal income tax purposes. Okay? You need to know how to calculate federal income tax using both the wage bracket method and the percentage method. Okay? And I've gone through I've gone through both examples already. In 4.1, we did the wage bracket method. In 4.2, we did the percentage method. Okay? So I hope this helps you out here. The last problem we have is dealing with bonuses. Okay? Here we have Damerly Company. This is a Utah employer. They want to give a holiday bonus check of $250 to each of their employees. Since it wants the check amount to be $250, you will need to gross up the amount of the bonus. Okay? You have to calculate the withholding taxes and the gross amount of the bonus to be made to John Rowland if its cumulative earnings for the year are $46,910. Besides being subject to Social Security taxes and federal income tax, a 4.95 Utah income tax must be withheld on the supplemental payment. Okay? Okay. So what they're saying here is that they want to cut their employees a check for $250. That's what they want to take home. That's what they want their employees to take home. Well, as we know, we are subject to taxes. Okay? So we need to figure out how much do I have to gross up this amount to be able to arrive at the $250 check amount that I'm needing. Now, the gross up formula is as follows. Okay, on top, we're going to put the intended payment. Below it, as the denominator, we're going to have 1 minus all of the applicable tax rates, which is FICA. Remember, FICA is made up of OASDI and HI. Federal income tax, and here we're using a supplemental rate of 22%. And state tax rate. So we're going to get the payment amount that we want to pay our employees over 1 minus all of the applicable rates. Okay? So let's work this out. Okay? So, my intended payment. Okay? My intended payment is how much? Well, I want my employees to take home $250. Okay? And I'm going to divide by all of my 1 minus my applicable rates. So it'll be 1 minus my supplemental federal income tax. Supplemental income tax, and that rate is 22%, which is gonna be 0.22 minus my FICA tax. So I have OASDI of 6.2%, which is 0.062. I'm sorry, 0.062. Okay, so my rate is 6.2%. Okay. Let me see. So, my OASDI, sorry, I was doing a calculation. My OASDI is 6.2%. I'm converting it to decimals, so it'll be 0.062. Okay. I'm going to subtract my HI, which is 1.45%, which is going to be 0.0145. Okay. And I'm going to do my state income tax, Utah income tax, which is 4.95%, which will be 0.0495 right there. So these are all of my taxes, okay? So this is my formula. My intended payment, which is $250, divided by 1 minus my supplemental income tax rate of 0.22, minus my OSDI of 0.62, HI 0.0145, state income tax 0.0495. Okay, everything is provided here. Okay, now we're gonna get our amount. Okay, so I've got my $250 on top. That doesn't change. Now on the bottom, I'm gonna have 1 minus 0.22 minus 0.062 minus 0.0145 minus 0.0495. Okay, those are my tax amounts. I'm just simplifying it so we can see it. And then let's get my calculator so we can do the math. So it'll be 1 minus 0.22 minus 0.062 minus 0.0145 minus 0.0495. Okay, that is going to give me, did I add correctly? Let me see. I think I added incorrectly. Let me see. So it's, what is my 0.22? It's 0.22 plus 0.062 plus 0.0145 plus 0.0495. That gives me 0.346. Okay, so it's 0. Let me write that down because I'm not gonna remember. So it's 0.346. Okay, so what's 1 minus 0.346? That's gonna give me 0.654, which is correct. Okay, so this is the number that I'm going to divide by. Okay, so it'll be the 250 divided by the 0.654 that we calculated. Okay, and then that's gonna give me, okay, let's see what that's gonna give you. 250 divided by 0.654, 382.26. Okay, this is the amount that I need to pay my employees for their bonus, 382.26. So when I do all of my deductions for all of my applicable taxes, for my income tax, my FICA for OASDI and HI, and my state income tax, they're able to take $250 home. So in order for them to take $250 home, I need to pay them $382.26. That way when I deduct my taxes, they'll have the $250 take home amount that I want. Now let's check your work. Okay, let's check my work. I like to always check my work to make sure that I did it right. You know, because sometimes I make a mistake. I add or subtract incorrectly. You never know. Okay, so I'm going to start off here with my gross bonus amount. Okay, gross bonus amount. Okay, and let me do my boxes over here. So my gross bonus amount that I calculated was $382.26. Okay, that is coming from the calculation of the formula. Okay, that is coming from right there. Okay, then I am going to deduct my federal income tax. Federal income tax. Okay, the rate provided was 22%. So it'll be 382.26 times 22%. Okay, and let's see what that gives me. 382.26 times 22%. That'll give me 84,097. Okay, now because the third digit is a 7, I'm going to round up. Remember, this is very important, you're rounding. So I'm going to round up to 8410. Okay, now I'm going to enter it in parentheses because these are deductions. Okay, remember, you are deducting your federal income tax from your paycheck. Okay, so that's your federal. Now I'm going to do my OASDI, and that is going to be 382.26 times 6.2%. Okay, what does that give us? 382.26 times 6.2%, 23.70. Okay, so that is the amount of my deduction. Okay. Next we have HI tax, which is going to be my 382.26 times 1.45%. And then that gives me 382.26 times 1.45%, 5.54. Okay, negative 5.54. Okay, remember to put it in minus because they're deductions. And last but not least, we have our Utah income tax. Okay, and that is 382.26. The rate for the income tax is 4.95%, and that was provided in the problem right here. Okay, the rate for the tax was given to you right there. Okay, so that gives me 382.26 times 4.95%. That gives me 1892. Okay. Now I can figure out my take-home bonus check amount. Okay. If I get paid $382.26, how much am I taking home as my bonus? Well, let's see. We're double checking. So I know that we calculated using the formula for our gross up amount. We estimated or calculated that we should pay our employees $382.26. Okay, let's figure out or confirm that that amount will yield a $250 take-home bonus. So I'm going to get my gross amount of $382.26, and I'm going to subtract all of my different taxes: $84.10, $23.70, $5.54, and $18.92, and that leaves me $250. Hooray! That is the amount that I want to cut my employees a check for $250. Okay, so I confirm that my calculation that I did over here in my formula was correct. I double checked my taxes. All of the calculations are provided here. That way I could confirm that the amount that I had calculated would yield me my $250 bonus. Okay, the formula, just follow the formula, enter the rates. The only thing that might change in your problem is the state income tax rate. HI will always be 6.2%. I'm sorry, HI will always be 1.45%, OASDI will be 6.2%, and then we have the supplemental income tax that is being used of 22%, okay, unless otherwise noted, okay. When you're entering your problem, any amounts that are taxes or deductions need to be entered in parentheses or minus signs, okay. They need to show as a deduction, okay, so you can be able to calculate your take-home bonus check, okay. So those are the 3 problems that I'm going to be covering to help you with homework 4A, okay. Please ensure that you read the problems carefully, that you read the instructions on how to round. What type of federal income tax are we calculating? Are we calculating the wage bracket method or the percentage method? Make sure that you're looking at the appropriate tax tables, whether they're single, they're married. There's a lot of information in this chapter. It's very important that we learn how to calculate our federal income tax, okay? So that is it. Until next time, hope you all have a wonderful day.